All right, got that going, and won't keep you guys for too long. And if y'all have any questions after, just hit me up in the Discord chat, and then we can go from there. But just a couple of things, guys, kind of as it relates to this market that I want to cover with y'all here. So we're pulling out the old fancy here today. So as far as a big picture, guys, the indexes are underneath the 21 EMA, and this means that the environment has changed. As you guys can see, and I know a lot of folks in the group taking some hits here, the market changes very quick. Go from a month of August where everything is just basically all-time highs every day, and the party's over. So failure to recognize this, guys, and failure to make adjustments is going to result in blown accounts. And it's going to be the same mindset, the same strategies, the same setups that were making you a killing in August, in June, July, basically since April. It's the same kind of mindset headed into this market condition that's going to blow your accounts here. Remember, right? When the market is underneath the 21, trading can get pretty difficult because that's exactly what the big money wants. They, guys, benefit so much from the chop because of the emotions of all the retail traders, which we'll talk a little bit more. But the chop can be a total nightmare and is responsible for more blown accounts than you guys can imagine. Right? That's what I tend to notice. Since we started the group a couple of years ago, people don't necessarily blow their accounts in the market as strong, and funny enough, they don't seem to blow accounts in the market is very weak. It's during these choppy conditions like we've seen over the last couple of weeks here, it's typically, guys, and people are taking on some serious damage. During these choppy conditions, the big money is just going to feast on the newer, kind of less experienced traders by selling them the dream. Or in other words, guys, they're starting to sell the options. They're making a killing off the bottom. They're making a killing during the summer when there's momentum, when there's demand. But during these choppy periods, they're going to make a killing selling you the call and selling you the put. And when an institution sells you options, they're looking to profit off of your misery. But if you guys can understand kind of the ugly game that's being played in the chop, then you can kind of profit in this environment. So a couple of things, guys, as far as, how do we profit in a market like this? One way of going about it is kind of finding the diamonds in the rough, right? Now, the tech names are done. Amazon, Netflix, Google, Apple, Amazon, right? They're ugly charts right now. But there are a couple names in the market that are kind of bucking the trend here, still sitting above the 21, still showing signs of strength, and still showing signs of momentum. So we can look for those kinds of trades, guys, and those kinds of names. But then as it relates to our favorites, the tech stocks, the semiconductor stocks, in this kind of environment, what you want to focus on is reversion to the mean trades. Which basically means moving back to the 21 and then pushing back off of it. So we'll talk about both of those, guys. But as far as a couple of stocks that are looking good right now, it's not the sexiest list. You've got silver and gold, right? Now we got Tesla on there, right? Obviously that's a favorite. You've got Target, DraftKings, UPS, and Beyond Meat. These are just a couple of examples right now of stocks, and you got the metals up there that are still in a trend, still holding above their 21, still showing signs of momentum, while a lot of our favorites, the tech and the semis, are doing the complete opposite. So we can take a look at a couple of names like that, guys, but then as far as reversion to the mean trades, just remember, and we've gotten like several different examples of how this works over the last couple of months here, stocks move away from the 21 and stocks move back to the 21. In an uptrending market, and in a downtrending market, and in a choppy environment. So we can get rid of this, guys, now and look at the charts here. No, I'm all set. Thank you. All right, so just pull up the 21, guys, and first we'll start with the big boys here. All right, now we look at technology as a whole. The short-term move is over, right? Now, by all means, guys, we could power up here this week, get back above the 21, and then the party's on again. But it's a healthy mindset to have right now that the party is over. Right? Things have changed here. We're not seeing the demand coming in. This is an uptrend. We pull back to the 21 and then we continue. But we hold above the moving average, and the moving average continues to point towards the upside. The party's over now. We're underneath the 21, and now we're losing momentum as the 21 is shifting to the downside. Only one of two things, guys, can happen once we find ourselves in this situation. Once the index is in a stock is underneath the 21 and it begins to point to the downside, one of two things happens. It's either a total chop fest where it's tough to make headway buying options in any direction until finally we work our way out of that crap, or it's the beginning of a shift in momentum to the downside, where we're now going to be trending in the opposite direction. And it's just as clean. We push away from the 21 and we make the reversion back to the mean. And then we push away from it until finally we get back above it. That's clean. That's easy trading, guys. This is difficult. And this is more so what we have right now. We could see the market go a little bit further from here, but be careful here on the chop. But for the time being, the party is over. Right now, we look at a couple different names, though. Obviously, Tesla. Tesla quickly got back above the 21. Moving average is still pointing to the upside. It got a little bit too far away, right? Sure enough, comes back home, and they came back in. Right? For the time being, guys, this stock is basically still in its uptrend. There's some momentum here, right? Something, say, again, like silver. Definitely not the most exciting thing in the world, but this trend is still alive, right? Something like gold. The trend is still alive, right? Something like Beyond Meat. An actually really nice trend right now. Moving average finally pointing back to the upside, pushing away from it. Right? While the market's dumping, they're picking up some Beyond Meat. Right? While the market is dumping, they're picking up some Tesla. While the market is dumping, they're holding up silver. Right? A couple of retail names, guys, like Target. Simple pullback to the 21, and it's holding up. So, we can find opportunities, guys, and a lot of times the same setups that we like to trade on the big names in a couple of these, call it like diamond in the rough stocks. Something like a DraftKings, as the market's rolling over, they continue to show signs of demand over here. So that setup that we saw there going into Friday, it's the same kind of setup that we like to trade on the Teslas, the Googles, the Apples. Find a stock that's just blowing with momentum, chill and wait for a nice lower time frame squeeze, and then ride the wave, right? So that was a gorgeous move there into the open on Friday. You got some momentum here, guys. So we can look for trades like that in this environment, right? And you can run scans for squeezes. And really, to simplify it, take a look at the different sectors. If you want to play trend trades, right? Swinging things for direction, look at the sectors that are holding up just fine. Something like transportation, right? Something maybe like the industrials, but it's a different story right here and right now in technology, and a different story in the semiconductors. Right? At the same time, we know what's going on behind the scenes. A lot of big money rebalancing, and it looks like the rebalancing is in the form of taking money out of the tech stocks where they had all their exposure this year and where they made fortunes, and putting that into other groups, right? Transport stocks, guys. So while the Apples and the Amazons are ugly, you get a super clean setup here in something like UPS. That's just been showing signs of life, as is its overall sector. So you can look, basically, guys, where's the money going? Because the interesting thing is that volatility is not spiking here. The big money is not in a panic to exit the market. If they were, we see volatility spiking. So more so what's happening, guys, is just really good old rotation. They've made crazy, crazy, crazy money in tech stocks and in semiconductor stocks. And now that they're doing some rotating, it only kind of makes sense that they're taking it out of here and they're putting into other things. So you can take the follow the money mindset and find opportunities in other sectors. But then as it relates, guys, to these leading names here, the former leading names, right? The Amazons, etc. At this point, at least to me, it's all about reversion to the mean trades. Right? Remember, even when things get ugly, we push away from the 21 and we push back to it. And then we push away from it and then we push back to it. So don't lose sight of that, guys. Right? Because you can look at something like Amazon here and say, man, this thing is super weak. But remember, right? Just like when something runs very far away from the 21 to the upside, if you're late to the party and you're coming in here trying to go long, you run the risk of getting caught in the reversion to the mean. The game does not change, guys, when things are moving to the downside. We want to be shorting these things if you're looking to short them after they've made the pullback back up to the 21. At this point, I'm not looking to try to short Amazon. Obviously, it could continue to sell off, but at the same time, it could run back towards that 21. So you look at Netflix, guys, as a perfect example right now. Right? Pushes off the 21 and then runs right back to it and then dumps right back off of it, right? We can trade that reversion to the mean, right? We can look for signs of a little bit of exhaustion to the downside and the selling pressure drying up, and then sell put credit spreads of deep out the money, taking advantage of all the inflated put premium that comes in here on the dump, and we can collect some put premium as they make a move back to the 21. You can also do the route of naked calls if you want. As we go back to the 21, you can sell the call credit spreads. Now the calls have gotten pumped up in implied volatility. Now you can look to go sell somebody a deep out the money call. But looking to time the market right now, guys, with the same concept of reversion to the mean. So, of course, technology could sell off tomorrow, but at the same time, can't be surprised if we start to bounce back at least towards that 21. So at this point, guys, right, as we've made a push away, as we get a day really ugly like Friday, and we'll use Amazon as an example, right? Just like total puke there on Friday, really, really ugly. You know, you can choose to short this thing, or you can choose to wait for the selling pressure to dry up and play the reversion potentially back towards the 21. So for a little bit of insight as far as what you guys should be looking at to get a sense of, is the selling pressure going to continue, or are we more likely to kind of get a nice little relief bounce here? One of the first things to look at, guys, is volume. Right now, me and Hassan earlier had a nice session talking a little bit about volume. When it comes to volume, guys, the only thing that's kind of relevant to me, and this relates to like a big picture thing, is selling volume. All right, now take a look at probably one of the craziest market rallies we'll ever see this year, right? And basically this entire rally happened on below average volume, right? You would think a market that it was this strong and just went up this much, even like a month during August, you would think we'd have huge explosive volume. But it's kind of the opposite, guys, right? We tend to just move higher, right? It's a stock and just the market itself, right? Natural kind of tendency and desire to move higher. And it tends to do that with no problem in the absence of selling pressure and selling volume. So we're trying to read the market here. To play a bounce, we're not looking for some huge explosion in buying volume. Rather, guys, we're looking for an absence of the selling pressure, right? So the analogy I like to use with selling volume is like, it's like gravity, right? When we have selling volume, the gravity switches on, right? And everything is coming back down to earth. But in the absence of gravity, in the absence of the big above average selling volume, everything just tends to float higher and higher until finally the selling volume shows up, the gravity gets switched back on, and then back down to earth we go. So take a look at the cues the last couple of days here, right? As we get those couple of days where the selling pressure finally dries up, right? The selling volume's gone. What do? Right? We get the reversion to the mean trade, right back to the 21. Now remember, guys, we're running towards a brick wall here. When we're in an uptrend, you're not going to have much luck shorting the market as it gets closer to that 21. Because as soon as it gets there, there's a big probability it's going to bounce right back in your face. So if we're going to play the bounces, we have to play them with the same rules and respect the same guidelines. We're probably going back to the 21, and we're probably going to get stuffed. So as we lose that selling volume, back home we go. We can play the move to it, but we got to jump off the wave, guys, as soon as we start getting close, right? Then let the market prove itself. We don't care if it keeps on running. Make it prove itself. Because we're under the 21. The 21 is pointing to the downside, so the probabilities tell us we're making a move back home and probably heading back lower. So wait for the selling volume here on the daily charts to dry up. And of course, selling volume on the daily takes basically the whole day for us to get the full reading here. So you can start with the 4-hour, the 2-hour, the 1-hour charts. But as far as a bounce, guys, remember, at least my mindset is we don't necessarily need to see explosive buying volume. We more so just need to see an absence of selling pressure and selling volume, and we're probably going to be able to make a nice little bounce back here. But the other thing we can do, which I'm actually a little bit more of a fan of than just straight old volume, is we can use the TTM squeeze indicator. And you guys, you don't need the Squeeze Pro. You can just, add the TTM squeeze study here from Thinkorswim by default. But here's what I really like about the indicator, right, is the histogram down here, guys, right? And it's basically a momentum reading. When you get these red bars to the downside, that's bearish momentum, right? Energy is getting released to the downside. One another thing we can look for here is for the histogram to switch from red and start going to yellow, right? That's a sign that that bearish momentum and all that energy getting released to the downside is starting to dry up. That can be a little bit of confirmation that everything's easing up here. And again, as the selling pressure eases off, we tend to just gradually float higher. So we can take the same mindset here on something like an Amazon. Say you're looking for a bounce, right? Say, guys, you have the same mindset as me right now. This thing is sold off so hard, right? And there's just put premium way out the money to sell, but you don't want to step in front of this thing if it's going to keep on dumping. So right, you still got the histogram to the downside here on the daily chart. But what we can do tomorrow, and you guys can do this on the market, you can do this on the stocks you're looking at, is start kind of from the ground and work your way up, right? Because the first time frame to start showing signs of that pressure easing up is going to be the 30-minute chart, which we can see is happening here, right? If the selling pressure really starts to dry up, that's going to start to hit the hourly chart here, right? If we really start to cool down, if the selling pressure is really backing off, we're going to see that happen as we're seeing here on the 2-hour chart. So to me, guys, it's just a nice little tool and a nice little way to kind of get a sense of, hey, am I looking for a bounce in something that is literally still throwing off energy to the downside? Or are things starting to dry up here a little bit? Pay very close attention to that, especially for you guys who like to sell options. Right now, this environment, guys, is perfect if you can get the timing right. And again, use the concept of reversion to the mean. Amazon has gotten spanked here, so there's put premium everywhere, right? Because of this big drop, all those out the money puts, the implied volatility goes through the roof. Now we can take advantage of that, and we can be selling put credit spreads much further out the money than we usually can because of how pumped up those puts get. And as soon as good old Amazon just simply holds up, these things evaporate and it all goes right into our pocket pretty quickly. That's what I'm looking for right now. We got to wait for the selling pressure to dry up. So those are two things, guys, I suggest y'all look at. Continue to look at the daily volume here and just know that you're not going to have much success selling put credit spreads, buying calls. You're not going to have much success getting that bounce to the reversion to the mean until the selling pressure dries up. Once it does, that's when we can start looking for those moves back to the 21. There's a handful of ways we can play them, but then we have got to get the heck out once we get close to the 21. So let me see, the future should have opened up here. Let's take a look, and you see the market, guys, is down about 0.5% here. Take a look at tech, and we're down about 0.5% as well. So obviously, long time till the market opens. We're not going to read too much into that. But that's what I wanted to share with you guys tonight. Right? Again, a lot of people are going to take some serious damage here, trying to jump the gun looking for bounces. That's my 2 pieces of advice. First and foremost, have the mindset, guys, that if you're playing a tech name or a semi name, that a bounce is nothing more than a move back to the 21. Lock in gains before we get close. Who cares if we continue to rally? You're going to give back all the money if we get stuffed again. So you can look for those reversion to the mean trades. You can look for the stocks like the DraftKings, the Teslas, etc., that are holding up well, showing signs of strength. And then, guys, we just take it from there. So as far as open positions for me, I got a handful of put credit spreads on Tesla, guys. 2 of them expire next week. So I sold puts at 415 and 405 for next Friday's expiration. So underneath that 21. And then for October expiration, I got a put credit spread down here at 380. So obviously we got battery week coming this week. And while of course, guys, Tesla could make some crazy ass move on battery week, it could just as easily kind of rope in every retail trader that's having that same thought and then just absolutely crush them. Again, sell them the dream and then break their hearts. So Tesla is definitely one of those stocks that can go either way. That's why I'm a fan of let everybody else kind of play that game up here. And I'm going to come be selling my puts somewhere down there. So we'll see how Tesla goes, guys. And right, you want to be careful with these things, especially heading into expiration day. Right? On expiration day, guys, all the volume on Friday was sitting at the 450 calls. Right? Basically is the big money trying to sell you the dream. Right? And here's what happens. Right? They're just going to dick you around all day long, making you think that those puts or those calls rather have a chance. They keep roping you in, and then just right before the close, they crush you, right? Because they're the ones that have been selling you those calls all week. All that volume on those calls is being created by the big money selling them to us. And this is what happens, right? They're going to toy with you all day long, convince you to buy more because here comes the breakout. And then right before the close, just a couple minutes before the bell goes off, they dump it and they collect all that premium from the calls that they sold you. And then, of course, guys, in the after hours, right back up she goes. So we'll see how Tesla goes this week, guys. I still got those long expiration put credit spreads on silver. And then I did get put credit spread here on Amazon for October's expiration. Again, am I bullish on Amazon right now? By no means. Do I think this thing is more likely to make a bounce before it drops to 2,700? Yes, I do. So ugly drop. These puts explode. I'm able to get a really, really nice risk reward selling puts, what, $250 out the money. And hey, Amazon drops another $250 here. It is what it is. So kind of the difference is, guys, in my mindset in this environment. Technically, I'm long Amazon and Tesla right now. The Amazon trade is I'm looking to take advantage of premium decay. I'm not bullish on Amazon. I don't think Amazon's going back to all-time highs this year, but I think it's got a good chance of simply holding up for a day or two, never mind bouncing back to the 21. And if it does, then like balloons, those puts that I sold that were getting just all kinds of chubby there on Friday, implied volatility drops, they lose a crap load of value, and then into my pockets it goes. Right? That's one trade in this environment, guys. And then there's something like Tesla, right? Tesla, I think can go higher. I think is strong, right? I think potentially things, they make a move to all-time highs. Two totally different trades, two totally different mindsets. And that's it, guys, heading into this week. All right, but remember, we've got to go into this week with the understanding that until something changes here, guys, it's just chop city. And all we're going to do is just move back and forth here between that 21 EMA. So remember, a lot of this crap, guys, is them just roping you in. On the pump, they want you to buy these calls. That worked in August. That worked in July. That worked in June. That worked in May. That worked in April. But they're selling you the dream now. And a lot of times when they roll it over, it's the same crap. They're selling you those out the money puts. And a lot of times, guys, you have to go through a couple of choppy markets and you have to be the person buying those options and kind of getting your ass handed to you to get a better understanding of how everything works here, right? And then when you do get your ass handed to you enough, you can start to profit in this environment, right? Easiest trade of the week for me was waiting for the market to bounce a bit here. And when we started bouncing, I did a call credit spread. And guys, I sold somebody else a call at 34.50. Right? So the same strategy for this kid, right? The same buy the dip mentality that's making these folks a fortune in these kinds of markets. Now the money's going into my pocket because we're under the 21. We've lost momentum and we are just freaking stuck. And on a much bigger level, that's what the institutions are doing right now. They're playing on the emotions of all those retail traders. And really, guys, just like you've all read everywhere in all the different articles, there's more people trading right now than ever. That means that there's more people who have no clue what they're doing now more than ever. and more people acting simply on human emotion now more than ever. So remember, every time you see this pop, realize that there's a couple million people who have no clue what they're doing, getting very excited, thinking, here we go. If you can get out of this shit and sell them the options, it's a nice way to start bringing in some premium and start small, right? Nothing wrong with bringing in $30, $40, $50 a week in some nice, easy premium, right? $200 a month. Pretty soon, right? It's a couple $100 a week. Last week, guys, I'm making a few $1,000 doing this. Did it there with a nice swing trade, and then again, doing it on Friday. Everybody is ready to buy the dip. So when we get that cute little bounce there on Friday, I'm selling calls all the way up here. And then right into my pocket it goes. So choppy environments, guys, but the rules do not change. I promise you. Stick to this simple structure for the rest of your trading journey, and you'll be okay. Under the 21 EMA, one of two things coming to you. Total chop fest, total chop fest, total chop fest, or the beginning of a downtrend. Now, how does a downtrend work? It works just like an uptrend. We move away from the 21 and we move back to it. And we move away from the 21, right? Same rules apply in an uptrend. We have that structure here, guys. We know what to be looking for from the market. Not the time to get aggressive and be looking for directional trades, right? Not the time to just be blindly buying the dip here. That's exactly what the institutions and traders like me want you to do. Every time we rally here, guys, they want you buying those calls. There's nothing happening here, but they're going to rope you in and they're going to keep on doing it. So we'll see what tomorrow brings us, guys. We're not going to go through too many setups right now because I'd rather wait till the morning time and get a sense of where we're going to open up. But those are the two kinds of trades I think you can look for in this environment. Reversion to the mean trades, where all you're looking to do, guys, is take advantage of inflated options on one side and then collect premium as it moves back to the 21, right? Or find names like Tesla, they got a chance of making a nice move. So I appreciate your time tonight, guys. I'll post up the recording of this shortly. And like I mentioned at the beginning, if y'all have any questions, go post them over there in the Discord chat, and I'm more than happy to help you guys out. But let's work hard this week. Let's get a little bit better and be safe tonight, guys. Appreciate your time.